Welcome to Liquid Finance Deep Dive. Today, we're dissecting an exchange-traded fund that has captured significant attention with its extraordinary dividend yield. The YMAX Universe Fund of Option Income ETFs, ticker YMAX. In a market hungry for income, YMAX promises an enticing solution, but a deeper understanding is crucial for serious investors. The allure of YMAX stems from its reported trailing 12-month dividend yield, which stands at an impressive 63.37%. This figure immediately raises questions. How is such a yield generated, and what are the inherent risks associated with it? We will explore the mechanics behind this income generation and evaluate its sustainability. Many investors are drawn to high-yield instruments, seeking consistent cash flow in a fluctuating market. However, the pursuit of yield often comes with an elevated risk profile, particularly when complex derivatives are involved. Our objective today is to peel back the layers of YMAX, providing a comprehensive analysis of its structure, performance, and risk characteristics. At its core, YMAX is an actively managed fund of funds. This means it doesn't directly hold underlying stocks, but rather invests in shares of other specialized YMAX ETFs. Each of these underlying ETFs employs a sophisticated synthetic covered call strategy on a single stock or a specific sector to generate income. The synthetic covered call strategy involves simultaneously holding long positions in U.S. Treasury bills or other cash equivalents and selling call options on the target asset. This approach aims to capture premium income from options sales, which is then distributed to shareholders as dividends. It's a strategy designed for income, not necessarily capital appreciation. YMAX was launched relatively recently, on January 16, 2024, by YMAX. This short operational history means we have limited long-term data for comprehensive backtesting and performance evaluation. Investors must consider this when assessing its long-term viability and consistency. The fund boasts assets under management, or AUM, of approximately $983.41 million, approaching the $1 billion mark. This substantial AUM indicates significant investor interest and liquidity, which are positive attributes for an exchange-traded fund. However, it's crucial to note the net expense ratio of 1.28%. While actively managed funds and those employing complex option strategies often carry higher fees, this figure is significantly above the average for many broad market equity exchange-traded funds. This expense directly impacts net returns. Examining YMAX's top holdings provides insight into its underlying exposure. The portfolio is diversified across various single-stock YMAX ETFs, including those tracking major companies like Tesla, Nvidia, and Google, as well as more volatile sectors like cryptocurrency-related entities. For instance, top holdings include YMAX MARA Option Income Strategy ETF, YMAX SMCI Option Income Strategy ETF, and YMAX mRNA Option Income Strategy ETF. This concentration in specific, often growth-oriented or volatile, underlying assets means YMAX's performance is intrinsically linked to the price movements of these individual stocks. Now, let's turn to performance. Over the past year, YMAX has delivered a 20.35% return. Year-to-date, it shows an 11.74% return, and over the last 6 months, a 14.37% return. These figures demonstrate its ability to generate significant returns in its short operational history. Comparing YMAX to a benchmark like the S&P 500, we observe a notable outperformance in the short term. While the S&P 500 returned 11.63% over the last year, YMAX achieved 18.98%. This suggests that the synthetic covered call strategy has effectively captured income during this period. However, it's crucial to remember that this outperformance is primarily driven by the high option premium income, which can be substantial in volatile markets. Capital appreciation of the underlying assets is capped, meaning YMAX will not fully participate in significant upside rallies of its holdings. Let's consider a direct peer comparison with YMAX Ultra Option Income Strategy ETF, ticker ULTY. ULTY has shown a slightly higher year-to-date return of 12.35% compared to YMAX's 11.74%. But YMAX's one-year return is significantly higher at 20.35% versus ULTY's 12.45%. Another relevant comparison is with YMAX Magnificent 7 Fund of Option Income ETFs, ticker YMAG. YMAX has demonstrated stronger year-to-date performance at 11.74% compared to YMAG's 2.32% and a significantly higher one-year return. This highlights the diversification benefits of YMAX's fund of funds approach. Moving to risk, YMAX exhibits a beta of 1.28. This indicates that YMAX is theoretically 28% more volatile than the overall market, as represented by its benchmark. Higher beta suggests greater price fluctuations, both up and down, compared to the broader market. The daily standard deviation for YMAX is 26.38%, reflecting a substantial level of volatility. This metric quantifies the dispersion of returns, indicating that YMAX's price movements can be quite significant on a daily basis. Maximum drawdown is a critical risk indicator, representing the largest percentage drop from a peak to a trough. YMAX's maximum drawdown since inception was 25.55%, which occurred on April 8, 2025. The recovery from this drawdown took 54 trading sessions. Comparing drawdowns with peers, YMAX's maximum drawdown of 25.55% is slightly less than ULTY's 26.84% and roughly equivalent to YMAG's 25.96%. However, it's significantly better than WNTR's substantial 38.37% drawdown, indicating YMAX's more diversified approach offers some mitigation. The correlation between YMAX and the S&P 500 is 0.81, indicating a strong positive relationship. This means that YMAX's price movements generally align with the broader market, despite its unique income strategy. A high correlation suggests that it may not offer significant diversification benefits against market downturns. The headline feature of YMAX is undeniably its dividend yield. The trailing 12-month dividend yield of 63.37% is exceptionally high, reflecting the fund's primary objective of generating current income through option premiums. This income is distributed monthly, providing a consistent cash flow stream. For 2024, YMAX provided a 44.21% dividend yield. The monthly dividends have varied, from a low of 29 cents in July 2025 to a high of $1.04 in October 2024. This variability is inherent to option income strategies, as premium values fluctuate with market volatility and underlying stock prices. The source of this high income is the consistent selling of call options. When an underlying stock price remains stable or declines, these options expire worthless, allowing the fund to retain the premium. However, if the stock price rises significantly, the calls may be exercised, capping the fund's upside and potentially leading to capital depreciation if the stock price exceeds the strike price. Investors should understand that a high dividend yield in option income exchange-traded funds does not necessarily equate to total return. Capital depreciation can offset or even exceed dividend income, especially in strong bull markets, where underlying assets experience significant appreciation beyond the option's strike prices. When comparing YMAX's dividend yield to ULTY, ULTY's trailing 12-month yield is an even more astounding 133.77%, significantly higher than YMAX's 63.37%. This suggests ULTY may employ a more aggressive option strategy or target even more volatile underlying assets to generate higher premiums. Conversely, YMAG's dividend yield for the trailing 12 months is 51.3%, which is lower than YMAX's. This difference reflects YMAG's more concentrated exposure to the Magnificent Seven stocks, which may have different volatility profiles and option premium generation capabilities compared to YMAX's broader universe of YMAX ETFs. For investors seeking a balance of high income and some market exposure, YMAX could be considered. Its fund-of-funds structure provides a degree of diversification across various YMAX strategies, mitigating the single-stock risk inherent in individual YMAX ETFs. However, its high expense ratio and the capped upside nature of synthetic covered calls mean it's unlikely to be a primary growth vehicle. It serves best as a supplemental income stream for portfolios that can tolerate higher volatility and potential capital fluctuations. In conclusion, YMAX offers an attractive high dividend yield through its actively managed fund-of-funds structure, utilizing synthetic covered call strategies across various underlying YMAX ETFs. Its recent performance has been strong, outperforming the S&P 500 in the short term. However, investors must carefully weigh the high expense ratio, elevated volatility, and the inherent capital appreciation limitations against the allure of its substantial income. YMAX is a complex instrument best suited for experienced investors who fully understand its strategy and can integrate it thoughtfully into a well-diversified portfolio.